All right, it looks like we're live. It's been a couple of weeks or a couple of weeks since we've had the live stream. As quite a few of you know, we were away for a couple of weeks on summer holidays or vacation, whatever you want to call it. Had a very good time with the family in Switzerland. I got to see Clive as well. So that was good. This is the second time I've met him and his wife. Um, nice to see all of you here. Chris Conman is here. Hio Silver. Olivier Leroy is here. Mark Sneed. Nashville Pasta Man is here. Wavy McFly from Luxembourg. Endurorama. Yeah, Rudy is here. He was just on the sofa, but he's just jumped off the sofa. He's on the floor. Carboni 239 greetings to my friends around the world. Riquois, good afternoon from Montreal or Montreal, as they would say in French. Modern Skeptic from Kent, that's where I am. GH Gitmo Primary Reception signing in. Hi, GH. Fox Moongaze, good evening, Fox. Robert Larson, glad to hear you had a great vacation, Mario. Yeah, we did. It was really nice, relaxing, and I was still able to post videos, which was good. Maybe not as detailed. I did follow things, but yeah, it's a little bit more relaxing. Over here says the U.S. Treasury revaluing its gold holding is just another gimmick to them to kick the. Yeah, I think it is over here. It's just devaluing the dollar even more and to keep going. And we're going to talk as well today about the other way they want to kick the can is trying to attract people to buy treasuries via these crypto stable coins, which in my opinion is another gimmick. Unfortunately, there is no easy solution to the intractable problem of debt and fiat currency, not just in the US, but in the whole of the Western world. The only way out is to have a Great Depression, a deflationary event, to basically clear out all the bad debt, and then hopefully they would think about going back on a sound money footing, but I'm not holding my breath. Andrew Watson says, hi, Mario and Rudy. Yeah, Rudy is here. He just jumped off the sofa a few minutes ago. Maybe he'll jump back on. Just talking about Rudy, we do have a Rudy merchandise or Monaco 64 merchandise store now. We used to do stuff on Teespring, but the quality got so bad that I hadn't done it for a few years. But we got someone who follows the channel who's running the merchandise store. This is one of the things that I got from there. It's a water bottle or it's got Rudy on it and Monaco 64, home of alternative economics and contrarian views. It's a really good water bottle. Also keeps everything cold or hot. I take it to play golf. Um, and yeah, Karen, the lady who runs the shop, she's done a raffle. So if you buy something there before the end of this month, you will you'll be entered to win a silver coin worth up to $50. So just wanted to let you know that. There's a link in the description to the store. Sat Stacker says hi from Vancouver. DJ Dorat, good evening, Mario and Rudy. Hi, DJ. Nice to see you here. Jacob Bryant from Vermont. Dilwyn Roberts. Dilwyn Roberts is a regular, long-time participant here and viewer. Richard King says greetings and salutations. F-37 Metal, hi, Monaco 64. I made it just in time. Yeah, I mean, I usually start a few minutes before the scheduled time just to say hello to everyone. Clive is coming on tonight as well. He should be coming on in a few minutes. Still hogging or logging. Evening Monaco, can you invite Francis back to the channel? Yeah, I probably will. I've had him a few times on. I like Francis. I think he's in London right now. I saw him doing a little live stream yesterday from a park in London. Over here says Jim Rogers thinks the crash is coming in October. I wouldn't be surprised. I mean, Michael Oliver, who I've had on, he seems to think that momentum is not great at all for the major stock market. Golden Sun, thank you for your super chat. Matt Bittner gives a thumbs up. One Species says, glad to see you here. Oh, thank you. Michael Kennedy says, good evening, Mario. Good evening, Michael. William PMCD, the benefit of crucifixion is it has paid all debts of the heart. Caesar's debt remains outstanding, however, the other debt is paid in full. That's an interesting saying. Derek Davies, hi Derek. Lisa Newham. Mario, it feels weird that silver is still available to buy. Hope you are all good. Yeah, I'm fine. I think yeah, the title of my live stream is "We Are Closer to Fiat Currency Meltdown Than Most Realize." It might sound a little bit alarmist, but I actually think the coming currency crisis is not, yeah, it is coming because of economics and debt, but I think the ingredient that's been missing for the US, the reason why they've been able to keep running huge deficits and increasing the debt is credibility of the ruling class. And by that, I include the executive, the legislative, and the judicial branches, everything, the military. And it seems to me that everything is so unhinged, not just in the US, but also here in the UK, the two major powers really of the Western Bloc, and even in other countries like Germany and France. I think the establishment and the powers that be are losing credibility really quickly, and fiat currencies they do well when the government and the state are pretty stable and people trust them. So the reason why you see in third world countries or less developed countries, you see much more hyperinflation and currency collapse is because they have very unstable states. And I think we're becoming more and more like them, unfortunately. And that's just a symptom of all the debt that we're under. Anita Dotson, your video with Eric Young, we watched several times, was very informative as to the short squeeze of silver. Yeah, I mean, Eric has done a lot of research on that. He's good. I met him as well this year when he came to London. Very nice guy. Over here, Mary, it would be interesting to interview you and Gerald Celente. Yeah, I mean, I've known of Gerald Celente and I've listened to him for years. I've just haven't, yeah, haven't had the chance to have him on. I'll keep that in mind. John Cook from Colorado says hello to everyone. Mark CH from Billericay in Essex. Yeah, I see there's been some major protests in Epping in Essex. I used to work with a guy in the city. He was from Epping Forest. And yeah, that seems to be, I always thought Epping was a fairly nice area, but nowadays in the UK, it doesn't matter where you live, you're getting a lot of troubles. That's the other thing. The social cohesion is really melting down or crumbling in the UK and in other countries, I would say as well, like France, maybe even Germany and the US. Hio silver. Not surprisingly, he says silver to take off soon. Yeah, I think gold and silver are just consolidating. Well, silver is looking more bullish. Uh, Gold has been consolidating for 4 months. Uh, I don't think it's a top, and pretty soon it's going to take off. We just need to break that like 3450, 3500 level. Yeah. Nashville Pasta Man. Mario, you still haven't picked up Jens Parsons, The Dying of Money. No, I haven't. I mean, I've got a lot of books I'm reading at the same time, so I need to finish some of them before I pick new ones. Pablo Pina, your opinion on Trump signing the crypto bill and uh, edging stable coins. Do you mean adding or that's a good question because I wanted to talk about that. Hi, Clive.
Good evening, Mario. Good evening
Yeah.
to all your viewers.
Yeah. Good evening, Clive. Nice to see you. Just wanted to thank the Can for your super chat in Canadian dollars. And before we answer that question about Trump's crypto bill, as I got a super chat in Canadian dollars, Clive, I wanted to show you and the viewers when I was in Switzerland, I went to Thun. Thun is Thun. It's a really nice small city by a lake in the middle of Switzerland. And I went to a coin shop there and I got this coin set from Canada from 1965. So with the exception of the nickel, I think, which is this one here that I have on my finger, this one, uh, this one here. They're all, and the penny, of course, they're all 80% silver and they look beautiful. I like the half dollar there, looks nice, and the dollar with the canoe. So
The great coins, Mario.
yeah,
Did
80.
did you did, did you manage to get a good price on them?
I don't remember. I probably paid like 15 francs or something like that. I mean, yeah. So I didn't. You know, when I don't think they. It was a young guy there. His father, who runs the place, was away. I don't think they're quite honorable. I think so. I think I got a pretty good
I,
price.
I, I managed to buy a Canadian coin last week. This is the Canadian werewolf coin. I don't know how well your viewers can see that.
Yeah.
It's not very much in focus there. There we are.
Mm,
It's in focus now. $2. I think it's $2. So it's 2 ounces anyway.
mm,
And it's solid silver. Oh, it's $10. Solid silver, 2 ounces. And it's a lovely
yeah.
coin.
I have a lot of those, I think it's pre 67 in Canada. They're all 80% silver. And then they went on to 50% silver. But anyway, Clive, what do you think about this? It's called the Genius Act, isn't it?
Yeah.
This cryptocurrency bill. I have my opinions on it. So I'll ask you, do you think it's going to solve all of America's debt problem and all of the and bring the whole world back to the dollar, like I think Trump seems to think to believe it will?
Well, it's another way of sweeping the debt problem under the rug, because it's going to absorb, or rather, create a lot of dollars will be inside these stable coins, and therefore they'll be kind of off the radar screen when it comes to money supply and all kinds of things. So I kind of feel it's just another way to sweeping things under the rug, but we'll have to see what sort of uptake it gets. Will people really want to hold it? And I think the other thing which worries me a little bit is, and I haven't figured out how this is going to work yet, but it's a step down the line towards the central bank digital currency. Now, the stable coins we're talking about are not government controlled at this point, but there's nothing to say that they won't piggyback on this legislation to create their own stable coin, or rather, maybe take over one of the existing stable coins so that they can control the population.
Yeah, I mean, Trump has said that he won't have any central bank digital currency, but I think he's playing the private avenue or road to serfdom. And yes, it's going to be very easy to like integrate, in my opinion, like a private coin or crypto stable coin. And my opinion on this bill is that it's it's akin to what happened in France in the 1790s after the assignats collapsed from high overissuance. They tried something Clive called the mandat territoriaux, which was a new currency supposed to be better than the assignats, but that currency didn't even take off. It just collapsed. And then Napoleon took over in 1796 as consul. And guess what currency and money he started using?
Go on, tell me.
Gold.
Well,
Went
that's
back to
the, that
gold.
that that that's so we go round in a circle.
Yeah.
Gold,
So, and he
pay
said
back
that
gold.
as long as I'm in charge, I will never use irredeemable paper to settle my bills. Because you can't settle bills with irredeemable paper, which is what we have today. So I think stable coins are just a last-ditch effort to keep the dollar going, and they're trying to attract this huge crypto market that has evolved. And yeah, they're trying to sucker them into stable coins, which is really something you don't need stable coins, in my opinion. But how it will help, Clive, is that the people who run the stable coins like Tether, they will use US treasuries to back those, the Tether. And Howard Lutnick, the Secretary of Commerce, who owns Cantor Fitzgerald, right? Who's the biggest bond broker in the US. He's benefiting from the relationship with Tether, and he's in the government pushing this. And I think they're going to pull in the young people as well, and even older people. The Wall Street is pushing it, and then they're gonna sucker everyone in, and then everything will implode. I actually think it has a lot of resemblances to the South Sea bubble, of which Charles Mackay talks about here. And back then, Clive, in the early 1700s, the UK had a debt problem, and they tried to use the South Sea Company as a way to basically pay off the debt. And everyone got involved, from the poorest in society to the richest and most famous. And a lot of people lost fortunes. Even Isaac Newton lost a fortune in the South Sea
Yeah, he got
bubble when
suckered. He was against it to start with, but then he got suckered in
yeah,
towards the end, didn't he?
yeah, I think he got out because he was stuck, and then when it started going back up, he got in, then it collapsed. I'm sure there will be a few smart operators or speculator who will make a fortune, but the majority of people will be left holding the bag.
Yeah, I mean, I think the real plan with these stable coins is they want the whole world to say, "Oh, it's nice and convenient to hold stable coins. I'll put my money into US dollars," and that means that someone, the stablecoin company, will be holding those treasuries and propping up the US dollar, propping up the treasury market. It may work, but
Yeah.
I don't know what the enthusiasm will be like. I won't have any enthusiasm for it. I can tell you.
Yeah, I mean, the only reason to use stable coins, and I've used them before, like USDT, I think is, or Tether, be not anymore because I don't have any more cryptos, but it's an easy way to convert your cryptocurrencies into fiat because when you put it into the stable coin, you're putting it into dollar, so you kind of negate the volatility. But I used to put it into, let's say, Tether or USDT and then exchange it right back to pounds. So I don't really see a reason for holding stable coins at all. It's just like an instrument or an avenue to get out of crypto back into fiat. Frank Kavija, thank you for your super chat. CBDC, own nothing and be happy. I agree. I agree. I'm going to stick to my silver and
Yeah,
my gold.
yeah. He's just given his last $2 to you. Now he's poor.
Yeah. Henry Clausen, thank you for your super chat. Aren't stable coins just treasury derivatives? No, they're not derivatives, stable coins. They're just like they're I guess you could say they're derivative of of the dollar. But they use treasury bills and notes and bonds as backing for the coins.
Well,
Uh,
at the end of the day, whether you're holding paper banknotes or money in your bank account or stable coins, you are still holding something which where the supply can be inflated ad infinitum, and there's going to be a lot more of it down the line, and that means there'll be a lot. It'll the more they create of uh, fiat money, whether it be stable coins or cash in the bank, the less it's worth at the end of the day. That's why
yeah.
everything today costs a lot more than it did 30 years ago. It's because there's so much more money. It's not because the things are worth more, it's because the money's worth less.
Yeah, Pablo Pina says, I remember when Mario mentioned EOS many times. Yeah, I did invest in EOS because it was kind of started by the guy who started Steam. I forget his name now. And I thought it was an interesting coin project because it was based on how much you owned. It wasn't proof of work. It was proof of ownership. So the more you owned, the more. So and it was quicker. It is quicker than Bitcoin and even Ethereum, but it didn't take off. And I got out quite a few years ago because it just didn't do. I think the reason it didn't work is the network effect, Clive. I don't know if you heard of EOS.
Yeah, I had heard of it.
I think it's a
I
good,
never bought it,
yeah,
but I certainly thought about it, but didn't do so at the time.
yeah. Even Ethereum, Clive. I mean, it's supposed to be like a Bitcoin with a smart contract tied to it, but it's still really slow. It's really hard to run something on Ethereum. That's why I don't understand why people are valuing it so much. It's been years since it's been around, and I don't know if it's gone anywhere, but I haven't followed it.
It's rocketed up in the last few weeks. It's
The
Ethereum's
price,
been yeah, the
the
price has
price, yes. But are
it's gone
there
from two
any?
seven to 3.7, I think.
I know, but are there actually any like projects or like I don't know, anything that is powered by Ethereum that is doing well? That's because I think that's the whole point. Is there any utility or is it just become like speculative, and as Michael Saylor says, it's just become an asset. And if that's so, I don't think it's going to last.
Well, I don't know too much about Ethereum, but I do know that there's millions of transactions every day which are on the Ethereum network, and every transaction requires something called gas, which is basically a certain
Yeah,
amount of Ethereum, and that basically gets burned or used for the transaction. So you have to, you can't do a transaction on the Ethereum network unless you own some Ethereum, which you will burn a little bit of every time you do a transaction. So, in that respect, there's a certain demand for it ongoing because there's literally
yeah,
millions of transactions a day.
yeah. Frank Kavija, another super chat, he says, Clive, I measure my wealth in ounces. That's very,
Well done, Frank. I do the same thing.
yeah.
I got rid of all my fiat, and now I
I
only
thought
own
you measured
ounces.
your wealth in tons, Clive.
Perhaps a few people think of that, but no, I don't have a ton of anything.
Yeah. F3 Metal 37 says, I love your little short stories. I had to keep listening to hear how the story ended. Great audience grabber. That's why I subscribe to your channel. You rock.
He's talking about my story about the lady one of the ladies I visited in her kitchen, or perhaps it was the Black Widow lady who was also scantily dressed when I met her. One of those stories I mentioned.
Yeah. Uh, some pranker says 1,000 ounces. Is that good? Well, yeah, in gold is very good. Silver, it's very good too. Yeah. Uh, how much is a kilo of Bitcoin? I don't know. It's not measured in kilos, Mark with a K. Uh, Digital Grave Digger. I like that song. What's Grave Digger? Uh, Willie Nelson sings it. Gold, silver, store energy, blockchain, tech, waste energy. Um, I guess to mine a Bitcoin, you do use energy. And then I guess if you don't move it around, you just leave it in your wallet, it's not going to do anything in terms of energy. Gold and silver, I guess, there you do need energy to mine it. And afterwards, I guess if you just keep it in the vault, there is no energy needed. But if you're gonna transfer your gold to someone else through a transaction, there will be a little bit of energy, but just a transportation. But what's your view on that, Clive?
Well, I share your view. Whether you mine gold or you mine Bitcoin, you will consume resources of the planet in some way. The question, which I think is open, is to what extent is this encouraging low-cost energy? Because in the Bitcoin game, the only winner will be the company which discovers how to create zero-cost energy. So, they're all looking for ways to get their energy out of volcanoes or solar power or things like that. Because if your cost of energy is slightly higher than somebody else, you're not the winner in the game.
Yeah.
So in a way, it might create lots of innovations in the energy field. I don't know if gold miners are also on the same game to try and find ways of getting their energy costs down.
Yeah.
I imagine the whole world is. I think we'd all like to have free energy if we can.
Yeah, Hio Silver is saying, is it time to get out of Fiat, Mario? I think it's always time to get out of Fiat. The only reason I hold Fiat balances in my bank account and maybe a little bit in my wallet is that you still need it for transactions and for paying bills, for paying taxes, unfortunately. But I try to keep as little as possible.
Well, Mario, it's funny he should ask that because I asked a very simple question to an artificial intelligent robot a few minutes ago, and I think I could read the first paragraph because it's quite relevant to what his question is. May I read that paragraph?
Mm,
So this is from artificial intelligence. It's not my opinion, but I do share the opinion. It says, the global financial system stands at a precarious crossroads with warning signs of an impending fiat currency crisis mounting across multiple dimensions. This comprehensive analysis is about 50 pages long, examines current economic indicators, historical precedents, and expert warnings to demonstrate that the risk of a major currency meltdown, particularly involving the US dollar, is far greater and more imminent than most policymakers and investors recognize. Through detailed examination of debt dynamics, monetary policy failures, and geopolitical shifts, this article reveals why the foundations of the current fiat currency system are far more fragile than they appear, and why the consequences of inaction could be catastrophic for the global economy. Now, I didn't prompt AI to write it. I just
Yeah.
simply asked the question. Actually, the question I asked was the question you put in the header. It's Are we closer to a fiat currency meltdown? That was the question.
Yeah, I said I actually it was a statement. I said why we are closer to the currency meltdown than most realize, and it's weird that this AI bot is thinking like me.
This is like must be about 30, 40. I haven't read it yet because I just did it just before the I came online. Must be about 30, 40 pages of study here. But it does point out right at the beginning that currency collapses have consistently caught populations and policymakers off guard despite clear warning signs that were visible to those willing to look.
Yeah, and Clive, the one of the major reasons why I'm starting to feel like this is going could be very close is nothing to do with like economics or like statistics of inflation. It's more to do with the faith and confidence in the establishment, in government, in the state. I think that's melting down really quickly, especially in the US with what's happened in the last week vis-a-vis Epstein, and also here in the UK. I mean, when I was in Switzerland and we met, we spoke about the fact that a lot of people are saying that they're concerned in the UK about civil war or some kind of uprising. And
I saw what was going on in Epping, a place where I used to live many, many decades ago. A nice, peaceful, leafy suburb where everybody said hello to everybody else, and you walked your dogs, and suddenly I look at it again, and it seems they're burning the cars and jumping, kicking police vans, or worse, maybe.
yeah, I was telling the viewers about Epping before you came on, and I used to work with someone in the city. He was from Epping Forest, which
Yeah,
is Epping, I guess, and it
yeah.
was a very nice area. Yeah, my friend Gavin
Oh,
lived there. But uh, Clive, I just want to give a shout out. I haven't given them a shout out for a while. Dirty Men Safe, because uh, and yeah, there's a link in the description. You can get 10% off. It's a link for me. It's a like a landing page, and Dirty Man Safe is just one of the safe ways to keep your valuables you know, from the from people who will probably be desperate when the fiat money system collapses. And I see here, Clive, they've done a bigger Dirty Men Safe. There's a smaller one. So yeah, check them out. They will ship to the UK as well, into Europe, I think. So you can keep everything in there, not just you can keep your crypto wallets if you're into that, your radio, yeah, anything, gold, silver. So there you go. Dirty.
well, I had one of your viewers write to me to say that he's buried his gold in the garden and that he's not planning to dig it up ever, so it'll still be there for his grandchildren, he hopes.
He's got to make sure he tells them it's there as well.
Well, I told him not to put his he was in the United States actually, so I said to him, put your house into a trust where it can't be sold. Otherwise, maybe when you die, your children will sell it for you without you knowing it. But if it's a trust, they
Yeah,
can't unless the trustees agree.
yeah. Golden Sun, thank you for a super chat. He says energy is free because the sun shines, the winds blow, and the waters flow. We just haven't imagined it. So
Well said.
yeah, yeah, that's right. I mean, I used to sail when I was a little boy in Brazil, and all you needed to move for the boat to move was a bit of wind. So there you go, free energy. Uh, Oh, Clive, the other reason I think the politicians, not just in Europe, but also in the US, are losing credibility is that I know, I'll probably get a lot of stick from some people who are still uh, very pro MAGA or pro Trump. But I've noticed on X, because I follow like the White House, I follow Caroline Levitt, and they seem to be going out of their way to say that everything's great, that they've got 300 billion extra in tariffs, which is actually a tax on the people. She's talking about how in the first term, the economy was the best economy ever in the history of the world. All this stuff because I think they want people to, yeah, not look at the problems, not look at the scandals and stuff. So what I decided to do, Clive, is go through trading economics and look at some long-term statistics for the US. And I'm doing this not to just have a go at the US because it's just as bad in other countries. It's just that the US is still so important that we need to look at this. So M2, which in my opinion is the real inflation, that's at all-time highs. So why does why does the Fed need to cut rates, right, to 1%? Uh, that's the United States government spending to GDP. That's still really high. It's almost 40%. Look at this, Clive. Prior to the Federal Reserve being created, the federal government spending to GDP was like less than 8%. It's interesting that these are wars, right? Wars. This was a
Mhm.
pandemic, but I don't see this going down. Um,
Well, it's not going to go down. I mean, the Congressional Budget Office have got it forecast to go up and up forever.
yeah.
Obviously, long before they get to their number, something is going to break. The other thing which I want to draw everybody's attention to is the very rapid rise in the interest expense as a percentage of their
Mm.
total revenues, revenues being the tax take. 3 years ago, it was 8% of their total revenues. This year, it's 18% of their total revenues. So and next year it's going to be more and more and more ad infinitum. And that's not just me saying it; it's the Congressional Budget Office who predict these things on behalf of the government, basically saying the interest cost is growing as a percentage of the tax take every year, because the GDP is rising by, let's say, 1 or 2%, but the interest cost is rising by 10% a year or some phenomenal figure like that.
Yeah, so like I'm not trying to defend Obama or anything, but I think a lot of time these things fluctuate because they do. It's not because of the president. So in 2009, the that government spending to GDP was quite high after the '08 crisis, and then it dropped all the way to 35 by 2014. Uh, so Trump really kept it pretty much where Obama brought it down to. Uh, and then you could argue, well, Trump really, because this 2020, he was still president. He was president until 2021. The excuse, of course, is that there was the COVID, but he was the one who got it up that high. And actually, it was under the Biden administration that it came down, and now it's going back up. So anyway, what's next? Uh, United States unemployed persons. So yeah, this was COVID, so you can ignore that. So I mean, he said it was the greatest economy ever, but you know, unemployed persons were dropping already before. What else?
And
Employed,
it's a bit of a disaster for young people. They say that the jobs market for people leaving university is the worst it's ever been.
yeah. So this is the deficit, uh, budget deficit to GDP. So, if you're running the greatest economy ever in the history of the world, so it's 2017, 2018, 2019, 2020. I would say, Clive, that you would be, the government wouldn't have to be borrowing as much as it did. The greatest economy in the world, I expect surpluses. So, what I'm trying to say here, people, is that don't buy into what Caroline Levitt and people in the Trump administration are saying. They're trying to take your attention away from the fact that, yeah, the dollar's in trouble. And I think this is one of the reasons why, Clive, the national debt, I think, is now at 37 anyway. And I've got here the debt to GDP. It's the highest. It's higher than even during World War II. And you said there's another one, interest expense. Maybe we can get that.
Yeah, you won't find that on the government website. It's something which you can
Government,
work.
well, here we've got it here. Let's see, government debt, revenue, spending.
You'll find that in the on the Congressional Budget Office's website.
Yeah, I
Uh,
know. Yeah, it's just I was trying to find it here. But anyway,
okay.
but okay, we can. The point I was trying to make, yeah, is the economy isn't as great. So we got some super chats here. Jake's Custom Parts. Thank you very much. That's a big super chat. And yeah, he doesn't have any questions. He's just thanking us, Clive.
Oh wow, what a hero! What a
Yeah,
good guy.
yeah.
He
Thank you
he
very
he
much.
he must have a lot. He must be counting in answers.
Or yeah, Chris Conman, thank you for your super chat. Yeah, Chris is a regular super chatter. Thank you very much, Chris. If Trump instructs the U.S. Treasury to revalue gold to 15,000, would that trigger an audit of U.S. gold holdings to verify them? What would happen to the cost of goods and services if this revaluation were to occur? Thanks. I'll let you answer that,
Well,
right? Because that's part of your uh, speculative
yeah.
thesis.
Well, let's first of all look at something that Scott Bessent said very recently, and I don't think a lot of people believe what he said, but he did say that they have a gold, they audit the gold every year, and he can assure everybody that all the gold is there. Now, if they're auditing all the gold every year, where is the audit? Nobody's seen it but him, apparently. But that's what he said. That's the first question. Now, if Trump instructs the US Treasury to revalue gold to 15K, would that trigger an audit? Well, they claim they've had one of US gold holdings to verify them. Well, my answer to that is even if they don't have an audit, even if the gold is not there, what will they be revaluing? They'll be revaluing the cobwebs in the empty vaults. But it doesn't matter as long as you don't know, you and I don't know that there's nothing there. It doesn't really matter. And the real point is, does the public at large believe that they have valued gold at a higher level? We're talking about pushing the possibility that they might revalue gold at $15,000 an ounce and stand as buyer of gold at that level. Obviously, if they did become buyers of gold at $15,000, there'd be a lot of gold sold to them by people who are taking advantage of that price, and they'd be able to refill the vaults. But what the real point of revaluing the gold at $15,000? It's an accounting trick which can generate roughly $4 trillion for the United States, which is enough to pay off the current year's deficit and the debt which is maturing in the next 6 to 12 months. So that's the number
Yeah,
they need, 15,000 to do that.
yeah, I agree. It will help in the very short term, but I think in the long term, it's just another, yeah, it's kicking the can down the road. Uh,
There's a second part to his question here.
yeah,
He said, "What would happen to the cost of goods and services
yeah,
if this revaluation of 15,000 were to occur?" Well, they did this revaluation of gold back in 1934, and that then they it was a 41% it was a 41% decline in the amount of gold, so it was a lot like almost 100% um, increase in the gold price, if you like, because it went from $20 to $35. Uh, at that time, it caused no increase in the price of goods or services at all. In fact, prices were kind of going
yeah.
down, and they were
Probably
trying to counteract that.
helped asset prices, no?
Yeah, I mean, it temporarily, but even the stock market was in a great depression at the time, so it did have a boost, yes,
Yeah.
but it was a boost in a long-term downtrend at the time.
Clive, I think the reason why it didn't trigger higher prices is because the year before uh, they confiscated, well, they didn't confiscate, but they threatened Americans with a $10,000 fine and imprisonment if they didn't hand in their gold for Federal Reserve notes. So once they raised the price of gold, it didn't affect people because they didn't have the gold anymore. I think only the insiders had the gold. They had shipped it to Switzerland because that, like you said, people know beforehand, don't they? And so that's why. And I think now it probably wouldn't either. It wouldn't really. It would probably create a little bit of rising prices, but how many people? I know very few people who have any gold, so I don't think it would
So
make much difference either.
yeah, the prices of things in the shops probably would not change. What would change would be the prices of financial assets such as silver, for example, and obviously equities and Bitcoin and ETFs related to property things. Because if the price of gold rises to $15,000, it's been at $15,000 by the Treasury, then at that point in time, there's going to be an awful lot of people who say, I'll take advantage of that, I'll take my money and I'll diversify into other assets. And they're not going to say, I'll diversify to cash and hold cash. That would make no sense. They're going to
Yeah,
diversify into the kinds of things they hold, which would be to assets, well, including precious metals, but so that would include silver and platinum, but it also include equities and other things.
yeah. So got Rudy here. Uh,
Hello, Rudy.
go back down, Rudy. Anyway, what else? Um, yeah, back in the 30s. So yeah, it didn't really affect inflation at all or rising prices. That's the other thing that people get confused. Uh, and one thing I wanted to talk about is this. I don't know if you've seen this, Clive. I'm going to share this. A couple of articles. One is from Bloomberg. Fed chair contender is now in favor of cutting rates, just as Trump wants. So I think he was a member of the board of the Federal Reserve before, Kevin Warsh, uh, and I bet a lot of people will want to cut rates because they want to be chairman of the Fed now or chairwoman.
What do you think the salary is if you're chairman of the Fed?
I don't know. Is it uh,
I don't
three
know
hundred
either, but
thousand dollars?
I imagine that it's
Can't
better
you
than
ask
mine.
your AI friends?
Well, yeah, we could find out.
Yeah.
They'll tell
Well,
us.
this guy as well, this Fred Kevin Warsh, he also wants the Treasury and the central bank to kind of merge because prior to 1951, the Treasury and the Fed worked very closely together. So some people are speculating that they would be doing a lot of yield curve control because that's what they did during World War One. The Fed kept, I think they kept the 10-year yield below 2.5% to finance the war. So I think this guy would be hugely bullish for gold And if he were nominated, it would be next year in May. Um, but I think markets, Clive, they discount these things uh, before the event happens. So I think we need to keep an eye on this, Fred.
Well, we're certainly whoever it is
Kevin
that is
Warsh.
ultimately appointed by the president to be the next federal chairman, Federal Reserve chairman, he's going to be somebody who is in favor of pursuing Trump's policies, specifically lowering interest rates. So
Yeah.
that will be good, whoever it is, whether it's this guy or some other guy.
And I think
By the
there'll
way,
be a,
you
yeah.
on the question of salary, um, yeah, sorry, Powell actually receives he's got a level one salary scale, which is 246, but he actually receives 190,000. Doesn't sound very much at all.
No, I mean, I think the Bank of England governor, he receives more than £500,000, which is like $650,000. So yeah, the is not a huge salary for Powell, but
But
I'm sure he gets a lot of perks, a
yeah,
lot of expenses. Well, I'm
speaking
not saying
arrangements.
he's not receiving it now, but once he retires, but also a lot of travel expenses, everything is covered. So I would say he's all right. uh, Mark with a K, with massive amounts of gold in Fort Knox, Trump should just revalue gold to 140,000 to increase the asset side of the balance sheet. That problem solved. Well, like Clive said, people have to believe that the gold is there, and right now they seem to. They have faith and confidence that the gold is there. Um, I mean, revaluing it to 140,000 would destroy the dollar. I would
Yeah.
say it's a bit
Um,
too much. And
yeah,
once
look,
you pay off the
God.
debt, yeah, I don't know.
The figure of 140,000 is a correct figure. It's approximately that to pay off the national debt.
All right.
It doesn't. It's not enough to pay off the unfunded liabilities of Social Security and things. That's a lot more. That's a lot much bigger figure. But the trouble is, even if they were to revalue gold to the 140,000 and then go through the transactions I described in my recent video, it wouldn't solve the problem because they cannot repay the national debt until it matures. And some of this national debt doesn't mature for 5 or 10 or 20 or even 30 years. And you have to add to that national debt, therefore, the interest expense on the debt for the next 5 or 10 years. You can't
Yeah.
just sort of
What
say, oh, we're paying
aren't
it off
they
today.
aren't they callable though, Clive? The debt, like you can call them in.
Definitely not, because
No.
I mean I'm not speaking from knowledge. I'm speaking from what's paid the obvious. If
Yeah.
it was callable, who would buy anything? Because you're in a any treasury
Yeah.
because you're then in a no-win situation. If you buy it at
Exactly.
100 and it goes to 101, well they're going to call it at 100, aren't they? So
Yeah.
you
Yeah.
can't possibly
Yeah.
win. So
Yeah.
people buy treasuries because they think their interest rates are or the yields are going to go down and the price is going to go up.
Yeah.
So no, they won't be callable. I mean, there could be such a thing, but I think 99.99999% will not be callable. That makes no sense.
Yeah, the other thing is that the debt is the other side of the debt is the credit, and there's a lot of people who depend on the debt for income. So if you pay it all off, it's like you basically destroy the fiat currency system. What do you replace it with if you don't have the gold? That's a real problem. Yeah, you're shooting yourself in the foot.
So my view is that when they revalue gold, and I'm assuming that this is coming because of the words that Scott Bessent has used earlier when he said we're going to monetize the balance sheet. When they do revalue gold to a higher level, my assumption is they'll revalue it at a level which will be sufficient to eliminate the current year's deficit and will be sufficient to pay off the debt which is maturing over a short-term time frame of 6 months to 1 year. And my calculation of the number which would be needed to do that is to revalue gold at $15,000 an ounce. That would see them good for the next 6 months or so.
Yeah. Okay. Yeah, I think historically I think the Fed had to back the currency 40% with gold. So at 40%, it would be around 30,000. And some people argue as well that because that the comment there was $140,000 would pay off the debt, but some people say that um, with gold, you have and the currency, as long as you can cover what foreigners owe to you, then you're fine. And foreigners own they own about 8 trillion in treasuries, so it's double your 4 trillion. So it's 30,000 as well, which sounds like, so I would say 30,000, but I'd be happy with 15,000 as well. Um, Endurorama, Mario, given the dwindling silver stock at the LBMA, what would be the short-term impact if they had to default on delivery? Could it be swept under the rug, such as LBMA nickel debacle? Well, the nickel debacle wasn't on the LMA, it was LME, which is separate, has no relationship to the LBMA. Uh, yeah, I mean, they went into default, the LBMA in gold earlier this year when they took 4 weeks to 8 weeks to for spot delivery. So they'll never like admit default. They'll just delay the delivery. Isn't that what they would do, Clive? Is that what? But they would lose a
Uh,
lot of credibility anyway. It would be over as a market.
you know, over and over again, when a price of something goes spiking up to a huge extent, it usually means the shorts are losing money. And the shorts are what make the market. So when you have the LME or the LBMA or anywhere like that, you don't have a market unless you've got people, specialists who are willing to go short. They're always there. So what happened with the nickel crisis, if it can be called a crisis, was there were some very significant shorts who were making the market. The price went to the moon. I think it went to $100,000 or something a ton, and the shorts were unable to meet their obligations at that very, very high price. So what did the LMND do? It decided to cancel all the contracts which were executed. So people had said, I'm long nickel. I'll sell my nickel at this high price. I like the price. I'll make a huge profit. I'll make millions of profit." So they cancelled their contracts, so they didn't make the profit. So these nickel holders who'd sold at a certain price, at a high price, then sued the LME, and it went to the courts, then it went to the higher court, and finally they lost. These are the holders of nickel, not the shorts. The longs lost when they sued, and finally they were refused the right to appeal to whatever the highest court of the land is in
Yeah,
the UK. You probably know what it is, but
yeah,
the the High Court or whatever but they went as high as they could, and then they were
yeah.
refused any further right of appeal. So the fact is, if you have a price on any exchange going to the moon, don't be surprised if they change the rules on you to stop you from profiting from it. That's exactly what happened to the Hunt
Because
brothers.
all these exchanges are like rigged to benefit the big banks and the speculators. So anyway, uh, Richie's Richie's network. How is the pound linked to the dollar? Well, if you have to go back to 1944 in the Bretton Woods Agreement. That was towards the end of World War II, and the U.S. had 2/3 of all the gold reserves in the world, and the system was created, and the dollar would be backed by gold, redeemable in gold for like in the at the sovereign level, not for individuals, at $35 an ounce. And then all the currencies from the countries that were part of the Bretton Woods system, their currencies were pegged to at a fixed rate to the dollar. So they were linked indirectly to gold. So the more dollars you earn, the more gold you could have. And that's why all these fiat currencies are basically like linked to the dollar, but they're also indirectly linked to gold. Uh, I guess in 1971, Nixon made that link to gold even more distant for all the other fiat currencies. So the other thing I would say, the UK is the biggest, second biggest holder, unfortunately, of U.S. Treasuries. So that makes the pound quite susceptible to the dollar. So what do you think, Clive? What? Yeah, is that
Yeah,
how you view currencies as well? Because the Swiss franc is the same.
everything was sort of fixed up until 1971, and then Bretton Woods fell apart,
Yeah,
thanks to Nixon, and all these currencies started floating freely. But for a long time, many of these currencies tried to keep themselves kind of pegged through to the dollar, not through an actual peg, but rather through market manipulation. But slowly but surely, the currencies started to pull in different directions. And of course, we ended up with a situation where uh, every currency was going its own direction for its own reasons.
yeah,
So now we have total free float, and no currency can be said to be totally pegged to the dollar. But there's a certain link because if the United States lowers interest rates, it's kind of let's do the same thing everywhere else
yeah.
in the world. So when the US lowers interest rates, in theory it lowers the value of the dollar, and every other country thinks, well, if we lower our interest rate, it'll restore the balance between our currency and the dollar.
Yeah, I mean, just like all, like the dollar, and it is, if you go back far enough, all prices in fiat dollars have a relationship to gold because the dollar used to be as good as gold. So it's the same thing for the pound versus the dollar. It used to be fixed with it, but yeah, it's not, it's floating now, but it's still related. And Durarama, thank you for your super chat. Uh, I saw a comment here. Uh, I forgot. There's so many.
There's a guy here, Robert Abrahams,
Yeah.
is asking, so revaluation of gold will put the price of gold up. Yes, that's true. Prices in the supermarket will stay similar. Prices of services will stay similar. Yes, that's probably likely true. What will happen to the price of silver, platinum, crypto, and so on? Well, the answer to that is all of those assets will rise in price because those people who are taking advantage of the now what will be a $15,000 bid on gold will sell, not all, a few of the people who've got that bid will sell some of their gold and they will reinvest into other things. And obviously, if they're silver precious metal investors, they're very likely to buy silver and platinum, so they should go up. And of course, there'll be some money will go into crypto and so on as well. So I think generally a rise in the gold price will push up the price of other assets, but it should not push up the price of consumer goods.
Greg Austin says gold is $42.22 cents per troy ounce per coinage act. Yeah, I mean the original coinage act was 1792, and they've changed the prices. They revalued the price of gold versus the currency a few times. I think they did it in the 1830s, then in 1934, then it was 1972, and then 1973. So it's gone from $19.37, I think, to $20.67, then to 35, then to 38, then to 42.22. But yeah, that's the statutory price, which is valued at 11 billion, the 261 million ounces the US has. The thing is, when they revalued that in 1973, gold took off, and it was traded around $80, and it never went below that. So if they revalue it to 3,500, for example, or 4,222, uh, you can bet that that price is never going to be breached. Below, gold will take off. And the other thing, and I think Jim Rickards talked about this, the reason why they haven't revalued since 73, despite the fact that the market price keeps going up, is because if they did revalue every 2 years or so, people would realize that gold is still really important. So they just want to keep it, they don't want people talking about gold. But now people are talking about gold.
Yeah, I think they've got to value it to a high enough figure so that people don't say, ah, that's my floor forever. They've got to put it up to a level where people say, ah, so high, I'm willing to sell some of my gold to the Treasury. I want to take advantage of this. And of course, that would be great for the Treasury because they'll be sucking in all this gold at the expense of the rest of the world. I mean, there'll even be foreign central banks who'll say, wow, we can reduce our deficit. We can reduce our debt if we sell some of our gold to the United States. So there'll be a lot of that going on, not only from individuals but and family offices, but also from foreign governments. I think.
Yeah.
But from the U.S. Treasury's point of view, they're going to be gathering all this gold, until the point comes where people say, "I'm not going to sell any more to the Treasury," and at the Treasury level, it'll be dead easy using the technique I've described in the video I did a couple of days ago. Dead easy to convert that gold which comes in into cash, whilst at the same time keeping the gold and not increasing the level of debt. So I've described exactly how that would work.
Yeah.
Um, so it would be a great move for the United States to make, and it would also be a great move actually for any country to make. If it wouldn't matter which country comes along and says we're going to buy gold at a higher price than the market price, and we're standing there as buyer of the last resort for unlimited amounts. The gold would flow to them. That would be absolutely great, but it also, over time, put a floor on the price.
Yeah, Indy, thank you for your super chat. And Indy asks, can you share a place I can send Clive and Mario something? Well, usually when people send me things, I tell them to send it to Gold Investments in London. Gold Investments, they're my affiliate, precious metals affiliate in the UK. Their details are below in the description. You can ship it to them. I don't want to give my home address, and having a post office box in the UK is not worth it. It's really, really expensive. Uh, so I'm sure Clive doesn't want to give out his address either. So you can send it to Gold Investments, and then I would forward it on to Clive because I do have Clive's address. Is that okay, Clive?
Yeah, that's really wonderful. Thank you very much,
Yeah,
Mario.
thank you. And thank
Yeah,
you,
that's
Indy. Yeah.
that's nice, Indy. Thank you very much, Indy.
Yeah, I've had a few people send me, quite a few people send me stuff through Gold Investments, and I appreciate it. So we've got 4 minutes. So Peter Howard has a question. Will silver become a strategic metal that only governments can hold? Um, I think, I mean, if there is a war, that could happen. But yeah, the price would, if silver goes up quite a lot, yeah, that might be the case. But I don't think countries have ever confiscated silver, and I think I would try to hold as much silver as possible still. What do you think, Clive?
Well, there's no real reason to confiscate silver unless they need it for something like making weapons, and they can't get it. Now, silver's made all over the world, so it's just a question of price. And if you need it to build your weapons, well, the price is irrelevant because you can print the money ad infinitum to buy the silver. So I don't see why they need to go and confiscate people's silver. I don't think
Yeah.
it's going to happen.
You could see also governments buy mining businesses and just take, produce the silver and just keep it for them. That's the other thing. It would probably drive up mining stocks quite high because they'd have to pay the right price.
One of the things which is really good for governments are rising asset prices, because when you have rising asset prices, it creates a good feeling amongst those who are likely to invest in businesses, entrepreneurs and people.
Yeah,
So it's the house price, same thing with house prices. People spend more money when the house
yeah,
price goes up. But the same thing with asset prices. If you are an investor and you have a portfolio of assets and they rise in price, you're going to say, I can afford to put a little bit here into
yeah,
this new business. I can invest in that new business. I can build a factory here or there. So governments want rising prices. They don't want to suppress prices by
yeah,
confiscating them from the private sector.
yeah. The other thing, Clive, is like capital gains tax. They get more capital gains tax, unless, of course, you're in Switzerland where there is no capital gains tax. Mr. Siljidi says, can you ask Clive when he when he thinks gold revaluation will happen? Well, before Clive answers, I think it's already happening. Whenever, gold goes up, it's being revalued. But officially, of course, that's what you're asking. So, Clive, can you give us a date, exact date?
Would you like the time of day as well? One of the things I've learned as a wealth manager is to make predictions, but don't put a date on them. That doesn't make any sense. But I think we are getting very close to a point where gold has to be at a much higher price. And the reason they would want to revalue it through a series of special transactions, which I described in the video I did, is that they can generate several trillion of cash in one fell swoop without increasing the debt. Of course, it's a form of quantitative easing through the back door, and so some would say it's going to be inflationary, but it's not going to be that inflationary because all it's actually doing is getting rid of the deficit for the current year and allowing them to redeem some of the debt which is maturing in the next 12 months. But when will it happen? I think the answer to that is my best guess is in the year before the next elections. This is just a guess. And the reason I think it would
Well,
happen the year before
that's
elections, it would
that's
boost the
this
economy.
year.
When have we got this? That's the midterms we're talking about, right?
Yeah,
Uh,
2026 is the midterms.
so, so when is the next presidential election? I don't know when that is.
28, but I
Yeah, so
think
that put it in 27.
yeah, I think they're concerned about the midterm, so it might even happen. Yeah, maybe in the next 2 years. So that's a good bet
It'll
for it.
boost the economy when it happens. So that's why I think they'd choose their timing to coincide with a time when they need to boost the economy. So if we go into recession, perhaps they'll do it sooner.
Yeah, Clive. Yeah, it's time. Um, just want to thank all the viewers for your generous super chats, and also not just the super chats, but for being here and participating, and for caring, caring about what Clive and I say. And Clive, thank you very much as well for coming on. And
Thanks and good night, and thanks to everybody.
yeah, and the other thing I would say to the viewers, check out Clive's YouTube channel, Clive Thompson. It's a good one. So,
I've got a video. It's almost finished. It'll be out Monday, Tuesday, or Wednesday, and it's going to be an absolute blockbuster in terms of a story. It's an amazing story, one which nobody knows,
okay.
and it's one of the greatest scandals of all time. But I'm not going to give more details than that. But
I
it's
think
coming.
I know what it is, but we'll talk about it after we end the stream.
Okay,
Yeah.
sure.
Okay.